There we go. Sorry about that. All right, we should have a much better... Is sound okay? Should be much better now. Okay. Okay, good. So welcome. Uh, as usual, we will spend today going over many markets, applying our core strategy, which is all about market timing. Okay. Looking at all the markets and finding price levels where supply and demand is out of balance. Remember, for those that are new to the session, here's why we focus on that. There's two things, and really only two things that matter. It's where our price is going to turn and where our price is going to go, right? To answer that question, so let's step a little bit backwards from there. When it comes to where do prices turn, okay, prices turn at price levels where supply and demand is out of balance. Okay, meaning prices turn where there are unfilled buy orders and unfilled sell orders. That's what demand and supply is. When it comes to the second question, where do prices go? Okay, there we look for areas on the chart where orders are filled. Remember, unfilled orders cause prices to turn. Filled orders facilitate price movement. Does everybody understand that and agree with that? And if you don't, it's okay. I want you to speak up because we'll talk through it. But remember, unfilled orders cause prices to turn. Filled orders facilitate price movement. So if we can just identify those two pictures on a chart, what else do we really need to do? Okay. Now I have this whole list of markets over here on the right, and I've got a bunch of them we can go through, and I plan to. But if you have markets that you want me to look at, certainly just type them into the chat. I'm here for you, so any markets you want to look at, you just let me know, and we should be able to get to them. Okay. All right, let's keep going. Why don't we start with the dollar? The dollar kind of is the master market here, and what you will see is, I know we've gone over this many times, but so far this week, prices have rallied up to the chat window there. Here's the weekly chart of the dollar. Prices rallied up to the supply zone and are now starting to pull back from that supply zone. When we dig inside those levels and look at the quality of those levels and what the true imbalance looks like, this first level we're coming into is not a great level. The ones above are stronger, have more unfilled orders in them when we're following our rules. But nevertheless, price almost never just goes right through a level like this. You almost always see some kind of a pullback. The upper ones, yeah, we expect big turns in price there. This one too, but I just wanted to let you know that the quality of these levels is different. Okay. Notice on the daily we got up to the meat of the supply. That's why you're starting to see a turn in price. Okay. All right. Let's keep going. Obviously, with that, the euro is rallying off of its weekly demand zone. Okay, there's our level. Don't need to spend too much time there. But notice in the euro, we are coming up to two supply zones. Again, because that weekly dollar, because the other zones are not that big of a deal. Okay. Now, partly because of that, again, I would focus on the upper zone here, not necessarily the one that price is in right now. Just because there's a supply zone here that price is in, doesn't mean it's a level that we, have to trade off of or even want to trade off of. This one's fine. I don't think there's anything wrong with risking some money here, but I choose to risk my capital on this upper supply zone. Okay, it has more odds enhancers that make it a stronger level, stronger imbalance. It has a bigger profit zone to the downside, which again makes it a more attractive trade and makes it higher probability and so on. Okay, so watch that. Let me size that chart back a little bit. Okay. And let's go to some other FX markets. And again, if you have a market that you want to look at, no problem, just let me know. Here's the yen. I actually didn't have anything in the yen. Do most of you trade more? This is a question. More futures or spot forex? That'll help me, figure out which markets to take a look at. Because again, to me, it really doesn't matter at all. We could spend all our time on the spot market if you want. It's the same conversation, same everything. Okay. Okay, let's focus on the spot market then, and we'll look at bigger time frame, smaller time frame. Let's go to let's start with the pound. That's not a level that we want to take a look at. On a smaller time frame, it is. Anyway, so as we go into any of these markets, just make sure in the back of your mind you get you understand where the dollar is. Okay. Okay. So here's the pound, and let's go to let's take a look at our 60-minute chart. Obviously, the market is turning here, so right there's that level. But let's keep this in, and then we'll we'll move forward from here. And that's actually up here. There we go. So there's our demand zone that the market is turning off of. Obviously, there's no significant supply or no fresh supply in here, so we'd want to go to a smaller time frame and take a look. Okay. One level of interest is this area right here. Okay. Because of all this, you do have a little bit of supply in here, but nothing that would meet the criteria that would allow us to take a trade, right? The odds enhancers aren't there. Look, there's supply and demand imbalances all over in any market. We want to focus on the significant supply and demand imbalances. Okay. So here's a level sitting right up here. And because these are here, it's going to take quite a bit of buying or demand to get through these levels. So when this level is reached, okay, which is about 134.75, you're probably going to reach that level with not too much demand left. Okay, or at least there should be room for a pullback. If the market keeps rallying as it is, you're probably looking at a pullback all the way back down to here. Okay, and remember that dollar, you might be thinking, well, how's that going to happen if the dollar falls? Well, remember, the dollar is likely to fall, but it's not into the strongest demand zone at the moment, or supply zone. The stronger ones are higher. It's pulling back now because it got to the meat of that, daily supply. All right, let's keep going. And let's pull up the Aussie dollar. I know I've shown this chart to you before, but let's just take a quick reminder of where we're at on the larger time frame. There's the weekly. Okay. So we're much closer to demand than we are to supply, but we don't need to spend too much time there. Just want to remind you. But there is room down to the supply zone. So if we find some to the demand zone, so if we find some larger time frame supply, we're okay. And I think you'll see what we have here is just that. Hang on a second. Yeah. So the level of interest is this guy right here. All right. So this is a level that looks like it's worth taking on the risk. Remember, well, let's talk through this. So if we talk about core strategy, we have the pattern, right? We have a strong drop in price away from the level. That suggests a big imbalance. Price didn't spend too much time at the level. Again, another clue that suggests a big imbalance, that banks are selling up there. And we know for sure that all the orders that were for sale up here did not get filled. How do we know that? Well, because if they were, wouldn't prices, if supply and demand was equal up here, wouldn't prices have stayed there? Okay, they didn't. They fell. All right. Okay. Now, what about profit zone? Well, we look at how far prices moved away from this level, which is all the way down to this low, before returning back to the level. So to figure out what the profit zone is, we're looking for demand, right? Well, by looking at this chart, which is a 60-minute chart of the Aussie dollar, it's that the chart is not telling us where demand is, but it's certainly telling us where significant demand is not. So make sure you understand that. And what I mean by that is the fact that price went all the way down to this low, which is 77.98. Okay. The fact that price went all the way down to this low tells us significant demand cannot be above that. It's not possible, right? Can't be above it. If it was, price never would have been able to get down there. Make sense? Okay. Now, at that low or lower, we'll find some significant demand, but we know it's not above that price. So looking at the distance from entry to our stop, we would put our stop, let me just put it here for a second, then we'll go to a smaller time frame. Whoops. Is this helpful, the way that we're doing this? Because if not, I'll change it up a little bit. Just really want to walk you through not just the rules, but the logic. You know what I mean? Okay, so notice I went to a smaller time frame for stop placement. Why? Because look what shows up. Another level here. So now I see that if I really want a real safe trade, I put my stop above this level. Now I've got double protection. Prices didn't fall from where my lower line is here. They actually fell from up here, right? But it's a good level, so if I put my proximal line up there, there's a good chance I'm not going to get filled in the trade, and I don't want that. So here's our entry, here's our stop. Now, looking at the distance to the low, that's only about 2 to 1. But that's not my I don't know that that's my profit zone. Now we have to look at a larger time frame for the profit zone. So let's do that. Okay, if I move this chart over here, okay, there's that low. I look to the left, I see, wait a second, there's a much bigger profit zone. Okay, but that's on a daily chart. So I want to confirm that on a smaller time frame over here and look inside that rally. So I'm just going to scrunch the chart until we can see back. Let's do that even more. Here's that whole area. Okay, so we don't really have any significant demand until down here. So I'm just going to put a blue line in there, which will be the target. All right. All right, now when I now we look at it, what looked like a big stop really isn't that big of a stop at all. Okay? I mean, it's all relative to what's your profit zone. Okay, and the two things are obviously the most important thing is how much money are you willing to lose, and then what's the relationship with that to how much money the chart is telling you you're able to make potentially. So now it looks fine, right? Now we're definitely greater than 4-1, if that's what you're looking for. And notice I put the blue line above the demand zone, not at the demand zone. At the demand zone, there's competition to buy. So we don't want to buy where there's competition to buy. We want to buy when there's competition to sell. All right. Let's take a look. I see your question there. Well, let me pull this daily chart back. $79.13. So you're talking about this area here? Yeah, let's just so looking at this, we would never look at that and say that's supply. We would always look at this picture, and that would force us to look at a smaller time frame inside that area. So let's just do that real quick. Yeah, so now when we did that, it looks great. Okay. Now remember, let me just kind of, here's the caveat to all this. The level that we picked down here and the 79.13, they're fine, but both are drop-based drop, not rally-based drop. Remember, drop-based drop is going to be found in the middle of moves. So that's always going to be closer to equilibrium, which means lower odds and smaller profit zones. The rally-based drop, like up here, and drop-based rally, those are found out at the extremes. So those are always associated with bigger profit zones and stronger odds. Does that make sense to everybody? Remember, there's two types of supply: rally-based drop, drop-based drop. There's two types of demand: drop-based rally, rally-based rally. The rally-based rally and drop-based drop, again, are found in the middle of moves, which is always closer to equilibrium and lower odds. The rally-based drop, drop-based rally, higher probability, bigger profit zones. Okay, let's move on to another market. Yeah, Carlos. And what a lot of people do today is, when they see that, they'll take that as a breakout, some people. Okay, let's keep going. Let's take a look. The dollar Canadian. And notice I'm sticking to the larger time frames here. Okay, there's a reason for that. If you're going to trade spot Forex, it's much safer to do it in the larger time frames than the smaller ones. Okay, so there's a 60-minute chart of the dollar Canadian. On this chart, if you're just trading off of one chart, this looks like a really good trade. I can't see any reason why why we wouldn't take it. But we're not just going to look at one time frame. That would be foolish, right? We don't need to look at the larger time frame because we already see here we have a nice profit zone to the downside. Let's look at a smaller time frame. All I want to do is look inside these candles and see what's going on there. Let's go a little bit smaller. I'm not going to go too much smaller. Okay. So I see that we're probably going to start to have a little bit of a challenge right here. And here's where the supply-demand equation flipped. So this area right here is going to be significant. So very likely the price is going to move from this area down to this area. But because the risk reward, this is an opportunity that's extremely high probability, but low. But your risk reward is not ideal. So one of those many times where you're probably going to be right in your in predicting where prices are going to move, but the reward is just not worth the risk. Does that make sense? You could have two great supply demand levels on a chart, your best ones ever, but it doesn't mean you have a trade. Okay. All right, let's keep going. Again, if you want a specific market, just type it in the chat. Otherwise, I'll keep going. Actually, why don't we go? I don't know if we looked at the euro futures. Why don't we look at the spot? Okay, and the chart that we want to probably focus on is this this 4-hour chart. And let me just scrunch that up a little bit. Okay. So notice this level jumps out at us right here. This this 118.50. Be careful with that though, because I looked at this earlier this morning. Right? Here's that 118. Here it is. Okay, so it's not necessarily this area up here, and it's not this area down here, so we wouldn't take this level. And this whole thing, is kind of a pullback into this area. So the quality area is really to start shorting the euro. Really don't come up until about 119. So having said that, we can look at a smaller time frame and look to buy pullbacks to demand zone. So this one already happened, but that's okay. All right. If prices do come down again, which they could, and they could from this level, then I would buy another pullback in there. Notice the first time back, price just touched the level and turned. That's another odds enhancer, right? That is telling you that there's a big supply-demand imbalance in there. So much so that when prices came back, they just touched the level and turned. Remember, all we're looking for, all our analysis, all our talk, it's simply about the finding the footprints of the significant buyers and significant sellers. That's all it is. Make sense? Okay. All right. We looked at the Aussie dollar. Oh, you know what? Price almost got up to our level. We'll keep this one in mind. I like this one. I like it a lot. And again, with any of these trades we're taking in these currencies, make sure you know what the dollar's doing, where it's at, and all that. Okay. Let's keep going. Let's look at the euro yen. I had this marked off as a possible short. Yeah, that's going to be from. Well, we still need this to rally. Up into here, there's some shorting opportunities. But if we look at the You look at the much larger time frames. Okay, so no reason to spend too much time on this market. Whoops, that's not the one I wanted. Here's a dollar Swiss. We really hardly look at the dollar Swiss. I look at the futures a lot, but in the spot market, I rarely look at the dollar Swiss. This can be very obviously similar to the euro. Yeah, I would just the chart is just telling you to basically treat it very similar. Yeah, let's see here. There we go. I never get too excited about a market that's in a range like this. Why do we have to be careful with markets that are just in a big sideways range? For short-term trading, not a big deal. For longer-term trading, it is a big deal because what you don't have inside these big ranges are significant supply-demand imbalances. If you did, price would not be in that range, right? What you have in a range like this is lots of orders being filled. There's no big imbalance anywhere. That's why you're able to trade to the highs and lows of the range. So again, on very small time frames, which I wouldn't do in spot Forex trading, I would do it in the futures. That's the challenge and opportunity. Okay. All right. So we went over a few opportunities. Watch this Aussie dollar, watch the euro, and some of the others. Remember, this one has a nice big profit zone on it. Keep an eye on the dollar. And then again, I know a lot of you, only one person said they trade futures also, but for those that, if you do, we would spend a lot of time on crude oil, copper, gold, all of those markets. Okay. So there's my email address, sseiden@tradingacademy.com. If you have any questions, happy to help you where I can. And if I can't help you, I'll point you in the right direction. But again, I'm here for you, so just utilize the email and utilize the sessions. And we'll see you again soon. All right, have a great day, everyone.